FX Nation, what's up guys? Welcome back to the channel. Welcome back to another video. And in this video guys, we're going to go ahead and we're going to take a look at some of the trade setups from London this morning. Let's go ahead and take a look. And I want to show you also an example at the very end of what a bad trade looks like. All right, or not even a bad trade. It's more of a trade that of a way to exit a trade that essentially goes bad. All right, so without further ado, let's just go ahead and jump right into it, guys. And let's go ahead and start out with pound JPY. And we see here pound JPY, we had a nice Asian range of about 40 pips or so. We ended up getting two trades out of this. All right, so first trade is going to be what? Here's the first trade right there. Okay, so entry was here, there's your stop loss, and then you're looking at quick 30 pips and 3 candles. 35 pips actually. Okay, so that's one trade. Second trade came in right after it. Boom. Okay, so there is your entry, your stop loss, and you go on. So that one you're looking at 50 pips. So you're looking at what, 80 pips on one pair. All right, so that was JPY, pound JPY. Now granted, one thing I do want to tell you about this this pair here, or these pairs that we're going to do in the pounds, is whenever you see that the EMAs are straight across like this, okay, whenever you see that, you're very highly likely, like 85% chance, 90% chance that the actual pair is going to just move sideways like this. Not a lot of movement. Okay, so just keep that in mind. If you ever see a pair, or if you walk up to a pair and you see the EMA lines all sideways like this, okay, probably one of two things: either skip the trade or just be prepared for not a whole lot of big moves. Granted, this one was a decent size move, but if we go to the other pairs, like pound AUD, and it was just really a mess, and it wasn't nothing. Like, look at this mess, right? It's just nothing that's tradable. Okay, so you just want to keep that in mind. All right, pound USD basically did a very similar structure as pound JPY, and that was, we actually had a very tight Asian range, but trading out of the edge here, we ended up getting a nice star formation here, and this first trade on 2 candles gave you 30 pips. Okay, so that's one trade. Second trade came when out of those 2 candles came that right there. Okay, so that was your trade there, and all the way up to the 200 EMA back home, that's 42 pips right there. So you got 42 pips there, and then you got 30 pips in another candle. Okay, so we're looking at what, 70 pips on one pair. EURCAD, we had a nice range here of about 30 pips on that pair, and then we ended up getting a type 1 setup here, accumulate, boom, hit and go. So you can't get any more clear than this. back home, that's 40 pips. Okay, so I mean that was extremely clear type 1 setup there. Okay, and notice how the second leg of the W basically started to develop right at the edge of our trading zone. 6:30, 6:45, 6:15, around that time is when they were hitting that. Okay, so just keep that in mind. So sometimes let them develop. Okay, if anything, guys, don't think that you have to trade out of the Asian edge to get a trade set up. Okay, I would much rather you wait, be patient, and let this do its thing first so you can clearly see the pattern develop and then take the trade. Don't take the trade over here, okay, and not give it enough time to develop. Okay, so there's certain rules that you have to follow. Just follow the rules. That if it's coming out of the Asian edge and you're trading the edge, make sure that you're doing either an M or W, or it has to be a railroad track or a star pattern, okay, to trade that, like we got in pound USD here. Okay, so make sure it's one of those. All right, so EURJPY. We got basically 2 trades out of this one as well. You ended up getting one here on one candle. That candle by itself to the 200 EMA was 20 pips. Okay, and then what happened right afterwards is that you see they started pinning to the 200 3 times. 1, 2, 3. Okay. Now we're not only pinning to the 200, but where are we at as well? We're in the middle of the Asian range, right? So, couple things. So two confirmations. We're pinning to the 200 EMA, right? So we're inducing traders to try to go short. And then secondly, we're at the middle of the Asian range. Okay, so there's a second trade going back up. So type 3 setup, and that one was 60 pips. All right. Next trade here was EURUSD. And EURUSD gave us a type 1 setup. We had a very tight range on EURUSD, but we got a nice type 1 setup in our trading zone, and we got here some nice railroad tracks. So there's your trade there. That's 66 pips. Just going back home to the 200 is 30 pips. Okay. Euro AUD. Euro AUD, we had a Asian range of 65 pips. So we had a blown Asian range. Okay. Typically, you don't trade this Asian range. Okay. Once you get consistent, then you'll understand how to trade it. But on this particular pair, we did have a good pattern to trade. And that was a type 2 pattern here, where we were pinning basically the bottom of the Asian range, right? And so, I mean, keep pinning one more time, and then go. Okay, now this didn't happen until the U.S. session. So, and this is another thing you have to consider is why you don't like to trade these types of range that are 65, that are over 50 pips long, because of this, because the initial move has already happened during Asia, right? So you have to understand that these market makers, they only have a certain range of pips that they can move each pair. Okay, so if it's 50 pips or more during Asia, the majority of the move has already been made in one direction. So guess what? Because they did the move so early, they have to collect contracts, get people to sell, and as soon as they have enough contracts, they can reverse the move and get some of the money back from moving so early during Asian session. Okay. Next pair was USDJPY, and I think some of you guys were mentioning this in the chat. By the way, if you're not part of the chat, go to fxntrading.com, sign up for a free account, get a link to the chat, so you can be part of it here. But essentially, they were looking at this trade. And so, right here, nice clear M formation, coming out in the trading zone at 345. And that particular trade, if we're trying to take it to the 200 back home, but it didn't. Essentially, you still got 25 pips out of it, and you potentially, if you were paying attention to it, you could have gotten a second trade back up to the 50 EMA, which was basically 2 candles, okay, and got another 10 pips or so back out of it as well. So you could have gotten your 30 pips out of that one trade. Okay. So very nice trade there on USDJPY. So let's take a look at this trade here that I want to show you guys. So this is CADJPY, and you can see that we had a very similar pattern develop as USDJPY. Right? So like this is what we were thinking. At least that's what I was thinking. Right? So you take the trade here. Okay? You take the trade here. Your stop loss is there. Alright? Now, you're expecting this to come down. It doesn't come down. What do? Right? So what is it that you do when it doesn't come down how you expect it? Well, if you remember, if you listen to one of my other videos, if you know the rules, you wait 6 candles, 90 minutes, right? So 2, 4, 6. If you're not in substantial profit, okay, what do? You get out of the trade, right? So we got out of this trade 6 candles in because we weren't in substantial profit. And luckily, we got out of the trade, and essentially, look, you know, it was just collecting. Tried it again. Nothing. Got out of the trade. So I tried this trade 2 times to see if we can get, you know, the M. But every time that we tried to get into it, they just moved sideways and collected more contracts. Okay, so this is 2 trades where we lost both trades, but they were losses because we got out of the trades based on our rules. Okay, and essentially we only lost 5 pips on each trade, which is nothing. But my point is that you need to understand the rules, and you need to make sure that you just follow the rules when you get into trades like this, okay, that are just not working how you expect them to work. Okay, and I know that I've shown you guys several times where all like the pound pairs are doing the same thing, or where all the euro pairs are doing the same thing. You know, sometimes they do that, but other times they don't. And this is one example where they don't, where you have USDJPY doing a very good pattern here, CADJPY doing starting to do a very good pattern, the same exact pattern almost. So you're trading both. One of them goes good, one of them doesn't. Okay, so just be aware of that when you're trading multiple of the same pair. So either both, JPY pairs or Euro pairs or pound pairs. Just make sure that just because they both look the same doesn't always necessarily mean that they're both going to do the same thing. Okay, there will be times, and I've shown you plenty of times, where they will do the same thing, but there will be other times where they won't. And this is just an example of when they don't do the same thing. All right, guys. Guys, please share the video. Let me know in the comments if you took any of these trade setups. Let me know if you found different trade setups on different pairs. And again, guys, if you're not part of the chat, go to fxntrading.com, create a free account, and join us in the chat room. If you need mentoring, there's also mentoring as well on the website as well, fxntrading.com. Guys, thank you so much, and have a great night. Guys, one last thing. Thank you so much for watching my videos. I really appreciate the fact that you take the time to watch my videos. I really hope that I've added value in each of the videos that I make for you guys, and I hope that you're learning something. As always, guys, please make sure you subscribe to the channel. Please like and share the videos if you found value in them. And also, don't forget to visit our website at www.fxntradinggroup.com. Once again, guys, thank you so much. I'm truly blessed.